Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on May 23rd. Like everyone else, I hope our offices will be closed on Monday for the Memorial Day holiday. We'll be back at it again on Tuesday. I do hope you have a great long weekend. Getting into the market, yeah, this was a week of selling for the most part. We kind of came in with the U.S. debt downgrade over the weekend, which the market shrugged off. Then we had some rising treasury rates, which we'll look at, which caused some reverberations, especially in the broad market. And then as I record this today, the market's battling with potential, big tariffs on the European Union, which, we'll see how that plays out, but basically a reigniting of some of the trade fears, okay? Overall, though, so far on an intermediate term basis, the pullback, which was, I don't want to say expected, but certainly not a surprise, has been pretty normal so far, whether you're looking at the big cap indexes or, our indicators, the intermediate term trend, our aggression index, which is growth versus defense, and even individual stocks, the ones that leaders or potential leaders that had ramped up are pulling back very grudgingly. There's been a couple of potholes, but for the most part, everything's pulling back pretty normally so far. Once again, we still, in my opinion, we don't have a ton of institutional quality leadership. There's some thinner things and some more speculative things and stuff like that have moved. But in terms of institutional quality names, there are some. There's definitely some, and we've been going through them every week. We'll go through some of them today that look very good, but we'd like to just see more. So, we'll see what happens. Obviously, if the market falls apart from here, all bets are off. But so far, I would just give the market the benefit of the doubt, because most of the evidence in the intermediate term is positive, number one. And there are, the bigger picture setup of the, the panic selling, the negative sentiment, the 3-day thrust, the nice rally off the lows in the market in a lot of stocks does generally bode well going forward. It's just that I would like personally to see more things really take off as opposed to set up before truly flooring the accelerator. In Cabot Growth Investors model portfolio, we've been sort of adding and rejiggering at the same time. We kicked one out, but put some money to work. We're still about 47% cash. We have a bunch of smaller positions, and if they kind of kick higher from here, not that we're going to average up in all of them at the same time, but we could put a lot of money to work that way. But it's up to the market in these stocks to really get moving before we put a huge chunk of money to work. Okay, let's dive into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. We'll start, as always, with the NASDAQ here. So, there is resistance up here, and we had this big run, obviously. So, it's very logical for it to pull back here. And so far, as you can see, it's pulling back pretty begrudgingly. It's barely pulled back in the bigger scheme of things during the past 5 or 6 weeks. More important to me is sort of this, the 25-day and the 50-day moving average. There's still plenty of daylight, which we talked about last week here on the NASDAQ. So the intermediate term trend here is clearly up. Again, we come in next week. You always have to be prepared. Maybe this is, in fact, we saw something, not to go on a tangent, but hey, what are you going to do? Back in, let's say 2015, 2016, here's the NASDAQ kind of fell off a cliff. Different situation. I'm not trying to draw a one-for-one parallel. But then we rallied all the way back up to the highs. And then, I can kind of go day by day. I won't. But if I did, you kind of see that the market ends up falling right back down to its lows. Now, am I saying that's going to happen here? I think the odds are against it for a few reasons. But you always have to be open to that possibility. But so far, you also have to go with what's in front of you. So far, hardly at all, hardly much of a pullback. S&P 500, same sort of thing, down to the 200-day line, but still daylight here with the 50-day moving average, which is now the lower one. I will say the broad market has taken a little bit more lumps. Okay, now the New York Composite, not as much daylight, but still positive. But when you do dig down to like the small caps, they're kind of barely positive at all, right, on an intermediate term basis. Look at the mid cap, same thing, positive, but not a lot of daylight there. So if the broad market deteriorates further, it could kind of create more of a mixed intermediate term trend, just looking at what we see now. But again, just going for what it's worth right now, it's still positive. And while the broad market's been sloppy, I would say the leading indexes, which have been the big cap indexes, and the leading stocks or potential leading stocks to this point have been handling themselves pretty well, okay? More to the point there is the NASDAQ's the strongest index, which I do like to see. And the growth indexes or the growth funds or whatever, that I look more like that. I mean, they still have work to do. You can just see there's all this overhead, so on and so forth. But this is the IPO fund. Normal pullback this so far after a big thrust. The equal weight, actually I like the QQQE, which is the equal weight NASDAQ 100. So it kind of takes out just the Apple and Google influence and stuff like that. Getting hit today, definitely pulling back. But again, quite a bit of daylight there. The ARK fund, which again, I always say this, it's not a perfect representation, but still it's aggressive stocks. Again, the pullback here has been pretty cool, calm, and controlled. So we could easily see some more near-term weakness here. And it's not like we're in the middle of some super strong bull market where, hey, I hope this thing pulls back 5% so I can buy some. You wouldn't want to see that, but you could see a little bit more weakness. But what I'm really going to be looking for is whether it's starting today or next week or whenever, can we kind of hang in here and then kind of begin a thrust higher where a lot of people who are still kind of negative say, oh, wait, maybe things aren't going to fall apart. Okay, so far, intermediate term trend up for the growth stuff, for the growth measures, for the major indexes, worth watching, but so far so good. What's interesting in the bond market, which I'm not going to go too deep into, this is the 30-year note, which popped above 5%, which is just a number. But it is round number. It did pop above there, and it's new highs, in interest rates. I usually look at the 10-year note just because that's been sort of the benchmark. That's not in the same category. It's been kind of coming up here, but I wouldn't say that is ringing any alarm bells. And if you look at the 5-year note, basically the yield curve is steepening. I'm not an economist, thank God. But maybe it means more economic growth. We'll see what happens. But the 30-year note has caused some of that broad market weakness. So it is something to watch, that 5% level, if we can kind of come in here, without super trade fears killing the market. But if the interest rates can come back down, it would be a positive thing. But I do think it's a little bit more nuanced this time. If you read the headlines, you'd think interest rates are exploding higher, but it's really the 30-year rate. The rest of the curve is kind of not doing much. So I'm just giving you those facts. You can do with them what you want. I'm focused more on the stock market and leading stocks, okay? Defensive stocks, I just want to point this out. No big rush here. It did perk up, but now it's back down. And I'm not going to pull up the chart on stockcharts.com, but our aggression index, which is the NASDAQ, or sometimes the equal weight NASDAQ 100, but either way versus the XLP is still firmly positive on an intermediate term basis. It looks a lot more like the NASDAQ, than small caps or something like that. So plenty of daylight there. So all in all, a down week, not unexpected, and not super damaging at this point. If we had another one or two of these, that might be a different story, but you can always say that. Right now, you just kind of go with what's there, and most of the intermediate term evidence is positive. Okay, in terms of ideas, just one, and we play with these sometimes, and do your own due diligence, because sometimes brokerage firms will send you like a disclaimer form on some of these, but these are leveraged long index funds, this one's just SSO, which is twice the S&P 500. I wouldn't be doing 4 times funds, number one. There's too much churn, like it will lose value if the market just chops in a big way. And I wouldn't be doing it on, unless you're a trader and very experienced, but I wouldn't be doing a lot of it on industry groups, a triple leverage fund on the financials. That can get dicey. But with the major indexes trying to play like a broad market move, something like SSO or QLD, which is double the NASDAQ 100, can work. And the reason I'm bringing it up now is we have pulled back here. We could pull back a little bit further. And you could be setting up like a decent risk reward, meaning like you nibble on SSO somewhere around here, and that, which is say 85. And, you have a stop somewhere down here, which is, 10%, less than 10%. And just see how it happens. If the market is healthy, it probably should, you probably shouldn't see it down here, right? So you're thinking like, hey, if this works, great. I'm getting in, the market in a leveraged way. If it doesn't work, my loss is controlled, so on and so forth, okay? Just an idea. It's not for everybody, but just I bring that up. Sometimes we play with those. Charles Schwab, obviously not, the growth stock of the centuries, but I will say that this has been, between this and like, I'll mention Robinhood too, just quickly. This one had a huge run, a huge decline, a huge comeback. So it's a little hard to, I don't say hard to handle. It looks good in here, but you don't know if it's going to need a little time. Schwab is obviously sort of the gentleman's bull market play so far in this cycle. Very persistent advance here, and the decline right here again, very grudging. Doesn't mean it can't go lower. Doesn't mean by the end of today it can't be lower. Who knows what the hell gets tweeted or whatever. But overall, it's not going to double overnight. It's a bigger cap stock. But Charles Schwab, if you're looking for some way to kind of like the leveraged long funds, but just a way to play sort of the financial sector and the overall sort of bull market, looks like one way. I'm still seeing a ton of strength in, I'm going to call them, and some of these are communications too, but they're almost like industrial communications firms that have good but not amazing growth prospects. This is Amphenol, APH. I've mentioned this before. I think this, these two volume clues in here, it's kind of hard to see with this text in here, but these two volume clues were big, and you can just see the stock has just been straight up and then, has held on to almost all the gains so far. But there's a bunch of them like Badger Meter, BMI. Look at this. It just kind of, really fell apart, was a complete nothing burger, and then out of nowhere after earnings has just completely ratcheted up and just straight sideways since. Curtis, I think it's Curtiss-Wright, CW. Yeah, look at this chart right here. I'm not saying to go chase these necessarily, although they haven't pulled back yet. Maybe they finally pull back, but there's just no desire for some of these things to pull back. A little thinner on the trading volume here, but liquid overall in terms of dollar volume. But you're just seeing a lot of strength in some of these areas that I wouldn't say are true blue growth areas, but they're growing, they're doing well, they're reacting well to earnings, and certainly strong here. My guess is the first pullback on these, assuming the market isn't in the tank, will probably work. Okay. Uber, just again, this is one that did kind of come out above this sort of resistance level by a couple of points. I wouldn't say it was the biggest breakout of all time, but good volume here on a couple of days higher. And now it's pulling back here. There are some fears with robotaxi. Tesla's going to launch a pilot or whatever. But either way, you can see there hasn't been a ton of selling volume-wise or price-wise. Looks pretty good. Snowflake, SNOW, kind of interesting. Just to pull up the monthly chart, I've been following this since 2020 when it came public. And we did mention it. It had kind of an interesting thing off the lows here. That's a story for a different video. But it really has never gotten in gear. It came public with a ridiculous valuation. Then you had the bear market. And you're going to see this is a monthly chart. So it's just been kind of grinding in this huge range for year after year after year. So I do keep an eye on it, and maybe it's starting to accelerate higher. Maybe. We'll see how it goes. There is some old overhead, but the numbers are good. Sales, cash flow, all that sort of thing. You have had this huge, looks like a character change off the lows. Good volume this week on earnings. The 200 level, maybe this provides some round number resistance, but it is a name that's on my watch list. I wouldn't mind seeing this stretch higher and then maybe pull back as some sort of potential entry here sometime in the weeks ahead. Duolingo, I don't really know what to do with this, but it just looks, it's very strong. And again, this is just another example of a very tidy pullback. Maybe you get a little air pocket at some point, shake out with the market next week after the holiday, more trade tensions or something like that. But certainly not a lot of sellers in there. Oh, I meant to put this in the other list. Jabil is another one of these sort of industrial, companies, growing, good company, not like the greatest growth story of all time. This one isn't out to new highs, but you can see the big comeback and very tight consolidation in here. Potential setting up an entry point. Chinese names and overseas names in general still look good. This is CSE, which is the Singaporean company, although they're all over Asia and actually South America. It had a nice run here, and then here's your big shakeout during the market correction. But again, it's just I'm putting more emphasis on what the stocks have done since the low, assuming it hasn't fallen 80% or whatever. And you can see that CSE returned to its high here, gapped up on earnings, and again, no give back so far. This one's smaller, 10 cent, but they also have a music subsidiary. Just a nice big base in here. It's not really my kind of play, but it is. It's a $25 billion market cap, call it, and nice breakout here on earnings and a little bit of follow through here so far. A little bit lower priced, but Chinese stocks look good. Life 360. This was in top 10 this week. I don't use it. I have kids that probably I should use it, but it's kind of like being able to not track your kids, but alerts when they arrive and leave somewhere they're supposed to be and stuff like that. This is one of those smaller, thinner names. This one does have a great growth story. Some of them don't, or are a little hokey. But sponsorship's ramping. It's still small, but 234 funds, up from 52 9 months ago. So they're buying it. Obviously, again, with the action up off the low, It's tricky. It's going to be volatile. It's certainly risky, but LIF is kind of a name that it does intrigue me here. Spotify, it has, it's had a big run, so there is risk. And usually the way you see I don't want to say risk, but the way you see it is if something's already had a big run and it returns to its highs, that's when you see some of the selling because people are like, all right, I already ridden this for 100%. Let me get back out now that it's near the highs. So you can see Shopify, it got hit on earnings, came back, sagged again, came back, sagged a little bit this week, came back. But overall, it's at the 20, it's a lot of point moves and stuff, but it's been holding the 25-day line. I don't know if it's a breakout play or not, but it's certainly showing relative strength here. And if it can clear out to new highs, it could have a run here. I'm not a gold guy. I never have been or whatever, but I will say gold has been in a big run. It's a little obvious here. This is gold itself, okay? But it has had a little bit of a consolidation here. I'm not saying this is the biggest correction of all time, but you've had about a month now of gold prices pulling back and hitting the 50-day line. So if you're interested in gold, my guess is it might be a little bit more of a lower risk entry here. So here's like Harmony Gold, HMY, which, you'd like to see a little bit more strength, or I would anyway, but, it's pulled back to the 50-day line basically, and now it's starting to bounce. So you kind of have a natural, if it doesn't work, you get stopped out you take a paper cut. But if this is another leg higher in gold and gold stocks, you're getting a pretty good entry point. So just something to think about. HMI is one example, but a lot of them obviously swim together. Just mentioning Netflix as the liquid leader, no pullback so far. That's pretty encouraging for it and the market. A couple other things. OKTA, OKTA. I'm bringing this up because the cybersecurity group, I think I mentioned this last week, it's probably the strongest growth group. I mean, aerospace looks good too, but in terms of like true blue growth, it's probably the strongest growth group out there. There's a lot of good looking names that we've mentioned. OKTA is one of those names that looks good. You can see sitting here near recent highs. I thought there was some old overhead, but no, it's cleared it. They do have earnings next week. So this will be the start. This group has a bunch of earnings coming up the next week or two. So just something to watch if you own some of the stocks in the group, or if you own OKTA, or if you're looking to buy some of the stocks, maybe it's a short-term shakeout, or maybe you get an earnings gap. Just be aware of things like OKTA and Zscaler and, Rubrik and CrowdStrike and stuff like that over the next couple weeks. And last but not least is Wingstop, which I am intrigued by. It's certainly not my typical chart that I would delve into. But these long-term cookie cutter stories they don't die easily. I mean, they can die 50%, don't get me wrong, but then if the company's still doing okay and it's a real winner like a Wingstop or Chipotle or whatever, it can come back. Okay. So this one fell, I'm eyeballing this, but from 430 to 200. So it got cut in half, a little bit more. But you can just see after this sort of mini bottoming area, it's really changed character with the help of, the earnings report right here kind of kicked it off. Back above the 200-day line, starting to pull back. Honestly, I'm not sure I would personally go there, but sometimes a lot of this overhead is already whacked out. And if you can get 2 or 3 weeks of consolidation in here, it could actually set up an entry point. You're seeing some of these off the bottom plays. I've mentioned them in the past couple of videos. Just going back to the market, like I said, we're 47% cash, so I'm not flooring the accelerator yet. It is kind of tempting to take a swing at some things on this dip, but I would just like to see, if the market can kind of do this and a lot of stocks follow through, I think there'll be a lot of, frankly, lower risk opportunities, meaning you can buy a breakout or a pullback resumption, set a stop somewhat underneath this pullback and have a pretty good risk reward trade. That's kind of what I'm really looking for, but we'll just have to see how it goes. So far, I just think the market, you have to give it the benefit of the doubt. You've had the meltdown, panic selling, the sentiment, the 3-day, some of the blast off stuff on the upside. You've seen some stocks emerge, and now we're finally getting a pullback, and we're having legitimate news on it, 50% tariffs on Europe or whatever. And so far it's handling itself pretty well. And I would say that the growth indexes like the NASDAQ and some of these other ones I showed you, like the IPO fund, are acting better sort of in the intermediate term than some of the other stuff, which is usually a good sign for growth, but also usually a good sign for like the risk on side of the market. So overall, I'm optimistic. I have been doing some buying, obviously, but to kind of really get into fifth gear, we'd like to see the market hold up here, could jiggle a little bit further and follow through on the upside going forward. Okay, that's all the time I have for today. Again, have a great long holiday weekend. We'll be back again next Friday with another Cabot Weekly Review.